Greetings, everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com, and there you can download my free ebook that will teach you the basics of options trading. And upon downloading my free ebook, you will be put into my email distribution where you'll start to receive my weekly newsletter that comes out every Monday at 10 a.m. Eastern Standard Time, and it's called the Cubicle Weekly Reader. Now, the great thing about this newsletter is I give, oftentimes, I give stock investing recommendations, I give cryptocurrency recommendations, and I also just talk about the world of finance and also investing. So you definitely want to be a part of the Cubicle Weekly Reader readership. So today is Wednesday, December the 21st. It's approximately 12:07 p.m. Eastern Standard Time. And so as you can see here, I got into a iron condor. Now this started out as a vertical call credit spread. So I put on this vertical call credit spread at approximately 11:05 a.m. And I selected these particular strike prices, right? 39.10. I sold at 39.10 and I bought the 39.15. But again, obviously, if you guys are familiar with options trading, you know that what I call the money strike price is 39.10, right? So I selected that particular strike price because the resistance levels that I'm looking at, meaning that these are levels where when the price of the underlying, and the underlying we're talking about in this case is SPX, when the price of the underlying reaches a resistance level, it has a tendency to pull back, right? So you have sellers at that particular level or in that area waiting to take profit. So the resistance levels, plural, that I've been looking at this morning or today are 38.72 and 38.98. So now that's the reason why. And so also I waited until around 11 o'clock, 11:05, because I felt as though the price of SPX, let me just take a look here. So SPX at 11:05, was at roughly So it was at roughly 38.86, right? So in terms of a visual, so it was roughly right about here. Let me just slide the chart down some more. So it was roughly about 38.86, about right here. But considering that the highest resistance level that I've been looking at is 38.98, I figured it wouldn't. It definitely would not breach that particular resistance level. And also the 39.10 is above the expected move for today, right? So, and if you guys have watched some of my videos, you know that I also look at, the previous day's closing price and also the next day's expected move. So just doing that math, I just add the expected move for the next day and add that to the previous day's closing price. And that kind of gives me an idea of where I need to be in terms of on the call side or also on the put side. Okay, so that's the reason why I selected the strike price of 39.10, which I call the money strike, because that's your short strike. And then when you buy the other strike price, that creates your credit spread. It caps your loss, and it creates a defined risk position, right? So your risk is defined. You can't lose no more than what you're risking on this particular vertical call credit spread. And so the risk here is 1,500, right? So every option contract controls 100 shares. I've sold 3 contracts of this vertical call credit spread. So 3 times 500 gives you your risk of 1,500. Now, a little later on, at approximately 11:15, 11:16 a.m., I decided that because the advanced declining indicator, so now it was actually at 11:16, it was actually above 2,000. So the advanced declining indicator basically looks at the number of stocks that are rising on the NYC minus the number of stocks that are declining on the NYC or the New York Stock Exchange, right? And so anytime I see this value for the advanced declining indicator above 2,000, then yeah, we're definitely going to have a major update. So we're talking about a 50-point move or more for the SPX, right? And so that's the reason why I decided to put on this vertical put credit spread by selling at 38.55 and buying at 38.50, right? And so essentially, I'm in this trade for $300, right? So my credit is $300 for this particular iron condor, which initially started out as a vertical call credit spread. Right, so the other thing I'm looking at here too is the volume up versus the volume down. So again, as you can see here, the stocks that are increasing on the NYC, the volume that's going into those stocks that are increasing is much more significant than the volume that's going into the stocks that are declining on the NYC, right? And then also, as I had mentioned previously in other videos, the other thing that I look at is the 11 sectors, right? So there are 11 sectors that make up the S&P 500. And so what you see here is those 11 sectors, right? So you got the financial sector, you got the information technology sector, you got the healthcare sector, you got the communication sector, you got the consumer discretionary sector, et cetera, et cetera. So as you can see here, every sector that makes up the S&P 500 is in the green. So again, you know, trade what you see is my motto, right? Trade what you see and not what you think. And so as you can see here, every sector of the S&P 500 is up. So without a doubt, we're going to have an update unless some noteworthy news comes out later on the day that could potentially, you know, change the market's behavior dramatically, you know. But nevertheless, there's nothing that I've seen, because I check the news every morning to check to see what reports are coming out. So there's nothing on the horizon for today that will make the market shift dramatically its direction. So going back to the position itself, so as you can see, it's somewhat, it's a little bit close to, it's starting to test the vertical put credit spread. But nevertheless, considering that the advanced declining indicator is still extremely high, close to 2,000, I'm pretty confident that this position will actually hold. So the price of the underlying SPX will actually hold above my vertical put credit spread of 38.55 and 38.50. So we'll see. So I'll come back roughly a few, maybe 30 minutes before the market closes, and give you guys an update as to how this position, this iron condor, is panning out. All right, so I'm back. So it's approximately 3:45 p.m. So 15 minutes before the market closes. So here's the price of SPX is at 38.47 and some change. So it's above my strike price on the put side of 38.55, and it's below my strike price of 39.10 on the call side. So I took in $300 for this iron condor. So I'm roughly at 97% of that, which is $291. Again, not a surprise that that the market is up to date, considering that every sector of the S&P 500 is in the green. as well as the advanced declining indicator is close to 2,000. Anything close to 2,000, particularly if it's over 2,000, that's extremely bullish, right? So again, no surprise there that, that's the reason why the market is up, because there are more stocks increasing on the NYC versus decreasing. And then the up-down volume, as you can see here, the volume that's being traded in those stocks that are increased on the NYC has been increasing throughout the day. And so again, everything pointing to the market being up today. And so the market is probably going to close up roughly around 50 or so points, right? Consider we only had 15 minutes to go. And that coincides with what I discovered, a couple of years ago, just doing some research going back to 1980, where I looked at the opening price and closing price for the S&P 500 going back to 1980. And I actually have the link to that video in the description below. And essentially what I discovered was that on average, the market moves about 50 to 60 points per trading session on average. So again, no surprise that the market is up, between 50 and 60 points today. So today, good trading day. Again, as I mentioned before, I like to make between $300 to $500 per day trading. And I normally do that at least more than 90% of the time. I make between $300 to $500 per day trading. Of course, there are some days where I lose, but nevertheless, today is not one of them. So hopefully you guys are learning something. Hopefully you guys are doing well in your trading. And again, definitely visit my website at cubicleinvesting.com and download that free ebook. And I also have a paid ebook that you can purchase as well, that actually gives you access to video links that you can download and use for future reference for your trading, for your options trading. So you definitely might want to consider, in addition to the free ebook, but purchasing the my other ebook that has links to trading videos. Thanks for watching.